Okay. We're I'm back, but this is not any better. Don't know why. Very odd. Um, hmm. May not. Uh, I wonder if it's that damn Wall Street has got me. Okay. Um, I'll just pick up where I left off here with volume profile, and hopefully my bit rate smooths out. Maybe just have internet trouble tonight. I'm not sure, but it's very odd. Normally don't have these problems. So just looking at this chart here, I just wanted to point out that the shaded area here, known as the value area, so that's where 70% of the trading took place. And then you have this line down here, it's just kind of hard to see, but it's this red horizontal line here at 1044, and that is actually indicating that that's where the most trades took place in this aggregation period. So again, it's 1 year daily chart. So okay, now my bit rate is back where it should be. Now it's back, so that's good. So I guess we got it. So here, let's get Telegram back up. There we go. And get in. So we should have that back. Everything is back, I guess. It's bouncing around quite a bit, but anyway, we're back. Got the bit rate I want. Okay, good. So this is an interesting way of looking at what's happening. Need to get those. I almost got into a live stream feedback loop where I'm live streaming my own live stream. I don't even know what happened. It would break the space-time continuum. So I just wanted to point out here that you can draw all kinds of lines on here that you want to, technical analysis, etc. But if you're just looking at price and you're not considering the volume at those prices. So other platforms have something similar. Sometimes it's called volume at price, or volume distribution, something like that. Turns out you can't actually kill Michael Myers. And we can see that, obviously there was less trading activity at the top here, as indicated by these shorter bars. And then, we have more. And where you have longer bars, it's indicating more volume at that price range. So we tend to see like consolidation there. So here's this consolidatory area, and it kind of corresponds to this longer bar here at 57, 56, 57. So going sideways, a lot of buying, a lot of selling at those price levels, going to turn into a support or resistance area. So, and another one here, this larger kind of sideways region here at 38, 40, in that range, and then in between those, you know, not a lot, because the stock pretty much passed through that region quickly. So I guess people didn't get the new link. Not sure. So nobody's here. I'll just go watch a movie. Maybe I should delete that other one. So, Ape Father is watching Batman today. Hope he screams like a maniac. I hope we get a new video like that. That would be awesome. That would be awesome. I'm going to go delete that other live stream that failed real quick. So, okay, there it is. That was 10 minutes already. That's crazy. That did not seem like it. Back here in just a moment. Okay. So I'm a fan of the volume profile analysis, and it's been one of my pet peeves for, like, you know, AMC or just in general YouTube stock gurus, fake gurus, that nobody really talks about volume in a meaningful way. They talk about price. They talk about the price as if past price predicts future performance. But which is kind of like the gambler's fallacy, but not too much on volume. So I like volume. Volume is a cool indicator. That's all for that. So. Maybe my connection will be okay now. That would be good. And it's a lot better. It's like my bitrate got cut in half before. Very odd. Okay.
Trend over here, you guys should be able to see that. It's a little bit less transparent, or more transparent, I'm sorry, because it's just a downtrend that we're following now, okay? We should be ripping past this right now. Why aren't we? January.
Okay, so let's start with a, we'll start with a conclusion. We should be ripping past this. Why aren't we? Well, I mean, seriously, if you look at this, you have a decent amount of volume consolidating here. But the largest trading area, or point of control is what it's really called. The point of control is further down. So, it doesn't necessarily guarantee that this would happen. This is not guaranteed. But, this could slip down to that area. Down here, and it's just have to see. If you go to a shorter aggregation period, 180 days, maybe, perhaps. Obviously, in the last half year, you have a much higher value area, sort of roughly centered on the price action, a little below center, I suppose, but with it between 23 and 52, with the control point right smack dab in the middle at 37. So obviously this period here being a higher average price there, and we could go back even more recently to see, okay, what does it look like? Actually, let me go 20 days. So you can see over the last 20 days, our point of control is 18, and it's the value area range is 16 to 20. So it's kind of really funneled itself down. Going back to the 1 year. Actually, let's look at the 2 year, see what that looks like. So when you look at it this way, you can see that this stuff up here is kind of, it's somewhat significant, but it's out. This is all outside of the value area. Going back to the 1 year, we see the same thing. So what is the likelihood of, you know, shooting back up there? I don't know. But when you look at this, you can kind of get a sense of, well, also there was hardly any meaningful volume at this $20 range, because in May it shot up straight through that price level up to the 50, 60, 70 area, and it never really consolidated here at the $20, $21 region. And in fact, it never hit it again until this day here. What is this? Mid-December? Never hit that. So what did it do once it came back down to that level? It just slid through it exactly the same way it slid up through it when it shot through it back in May. So you can kind of get a sense of important levels here with this, and kind of piece together a picture of what's happening. Of course, you can't ever really do that, but you can try. Okay. So, but anyway, Rico, this is the number one argument of the apes. The price should be higher. Oh, it should be higher. Yeah, definitely. I mean, everybody knows that. It should be higher. When in reality, you kind of have, you have empirical evidence that shows one thing, but there's an insistence on another thing. And the empirical, quote-unquote, empirical evidence that we do get doesn't really show it. It doesn't really justify it. So let's see how it goes.
The FTDs. December FTDs, right? From November 15th over here, where I started saying, hey, something's going to happen, and then this happened. This fucking thing happened. Okay?
Well, that's
so
something.
We got that shot down, and then on this...
Don't sell yourself short. That was something. It was just, exactly opposite of what you wanted to. But, where there's a will, there's a way. Rico, just, keep the positive vibes up, man. Okay. So FTDs are the key.
Climb, I was like, okay, here we go. This looks like spring, right? If you're looking at accumulation, if you're getting rid of this. Oh, this looks like a perfect
And again, I'm not going to switch back to Thinkorswim, but remember, that area right there, that is literally the area that we just identified with no volume there. So he thought it was going to bounce off that area. I mean, look at a volume profile chart. Seriously, look at this. You can see that, it makes sense. Okay, anyway. Jesus.
Accumulation. If you draw this trend line here, broke the support, spring, test, LPS, break out of the symmetrical triangle. That didn't happen. So let's look into the FTDs. There's going to be a video about FTDs. I'm going to do a video about short exempt in regards to...
Oh, good. Another thing that's irrelevant.
When the stock goes down 10% in a day, triggers SSR. And a lot of the times that means absolute dog shit, and we know why. Or some of you don't. I know, I read up on it, and I'll explain it to you in the next video. And I'm going to be coming out with a lot of other videos explaining a lot of the things that you guys need to understand and realize why we went in January, why we went in May/June, and why we're most likely going to go again later on in a full year cycle.
I love the, comparison there. But we know that conditions are different. Most importantly, and going forward, this is going to even be more important, is a lack of stimulus. People don't have money. I saw when I had to go do some work this afternoon. I was coming back around 5 p.m. in the gas station near my apartment. I saw, and it was not this earlier, and I did not pay this last night when I got gas, $4.09. $4.09. Yesterday it was $3.79, 75, somewhere around there. So, more than 25-cent jump in less than one day. In that context, to say that this, we ran in January, we ran in June, and we're most likely going to run again, is really overlooking a lot of things that are different. I mean, I don't even care about the stock or specifically, but in terms of the market, in terms of people's pocketbooks. I don't know who has a pocketbook anymore, but, people's purse strings, how much money they have. Savings. Look at the savings rate. It's shot up during COVID, and now it's back in the shitter again, because people are getting squeezed. Food is expensive. Gas is going to continue to go up with this global conflict. So, it's just, you have to do a lot of mental gymnastics, and you have to overlook a lot of things. You have to suspend disbelief and just totally ignore factors. I mean, but that seems to be the common theme. All right, I gotta let this play. I'm jibber-jabbering too much.
But let's just, this isn't a video about when we're gonna go. It's a video about what's going on. So let me show you guys FTDs. It's literally public information. You can just go SEC.gov data, failures to deliver data. So let's go into November 15th. And this is something you guys have to take note of. It says on the 15th right here, starting after July 2009, each month is contained in two files. The first half of a given month is available at the end of the month, and the second half is of a given month is available at the 15th of the next month. Okay? So let's go into, say, November 15th is when we really started going down on AMC. All right, so let's go into, we should probably go into either the first half of December or the second half of November. I'd probably go into this one, right? Okay, perfect. So the first half of December will show November. So here we go. Let's go into the FTD fails. Open this up, search AMC Entertainment, and there's going to be several failure to delivers, and you will realize how many they're not delivering back. So first one.
Why would you look at it this way, first of all? I mean, it's good to use the actual data, yes. And I always preach that when we talk about 13Fs. Go to Edgar, don't look at Fintel, yada, yada, yada. But it makes a lot more sense when you view it in chart form. So this is chart exchange. I mean, we could probably correlate to see if it matches up to what he's going to say. Because we can look back through here, but I mean, they get it from the SEC. So he's looking at number, so it's in this range. So we can compare it and see.
Right here, 140,000. Next one, 41,000. Next one, 708,000. Right here.
Okay. He's excited about that. 708. Here's 7. Okay. So he's looking at, I thought he said that it was going to be November. 708,000 is December 3rd right here. So that's that one. But again, and well, I guess not again because I didn't say this yet in this one, but footnote 8 here, and I'll blow it up so we can see it, and I'll take this off because it's probably annoying. Fails to deliver on a given day are a cumulative number of all fails outstanding until that day, plus new fails that occur that day, less fails that settle that day. So what does that mean? It means that on December 3rd, there was an existing number of failed to delivers going into that day. So this number here, this failed to deliver number that's reported on the 3rd, starts with that number and includes any new fails that have been added that day minus any that settle that day. So it's a net number. So you can see that here. We have fails to deliver, previous price, T plus 35 date, notional amount, and FTD change. So this is really, this FTD change column is calculated by Chart Exchange. This doesn't exist in the actual data, but what they do is take each day and just subtract it from each other. So on the 2nd, you had 41,000 as reported in the SEC data, and then the next day you had 708,000 reported in the SEC data. Take the difference of those two, that's 666,875, so that represents the number of new fails, or the change, I suppose, the change. So going from the 3rd to the 6th, then we see the number jumps down to 4297, and it's an FTD change of minus 704,000. So what's that mean? That means that those were settled. They were covered. So I don't know exactly how he's going to spin this. These numbers that are given by the SEC, the numbers that are on here, this site right here, which is where he is, and it even says here, right here, the values of total fails to deliver shares represent the aggregate net balance of shares that failed to be delivered as of a particular settlement date. If the aggregate, okay, blah, 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 that's talking about 2008. The figure is not a daily amount of fails, but a combined figure that shows both new fails on the reporting day as well as existing fails. That's what we just said, phrased differently on Chart Exchange, but that's the same thing. In other words, these numbers reflect aggregate fails as of a specific point in time and may have little to no relationship to yesterday's aggregate fails. Thus, it is important to note that the age of fails cannot be determined by looking at these numbers. In addition, the underlying sources of the fails to deliver shares is not necessarily the same as the underlying sources of the fails to deliver shares reported the day prior or the day after. So you can't just assume that they're all naked shorts, in other words. But we wouldn't do that anyway, would we? No, of course not. Okay, so this is where he's getting it from. Data's there. And you know, they always say, please note that fails to deliver can occur for a number of reasons on both long and short sales. Therefore, fails to deliver are not necessarily a result of short selling and are not evidence of abusive short selling or naked short selling. And then there's the links there to that information. So we see that caveat in a lot of places here. And you know, the reality is when retail investors buy, establish a long position, when they buy and you're going long, that may actually be reported as a short sale. And I have a video about that, talking about short volume and why it's not what the apes think it is. It's not all short selling volume in terms of short positions, because market makers will naked short shares to retail and then turn around and buy the shares. So they need to fill the order quickly because their job is to provide liquidity. So they go ahead and fill the order at the price that it is then. That preserves the price, and then they turn around and buy the shares, cover them. That is, it's covered. So that's how, in a nutshell, your long position may have come about from a short position on the market maker side. So theoretically, it could result in a fail to deliver. But in any case, the bigger point here is that these are net cumulative net numbers. So one day is telling you on that day, here's how many total exist for this security. And then the next day is here's how many total exist now, today, for this security. So if it went up from one day to the next, there were more. If it went down from one day to the next, there are fewer. And that's a big, big point that needs to be remembered here. So let me go back and we'll hear him.
Back. So, first one. Right here, 140,000.
Now, why isn't he saying the date? Like, you can't really see that. I mean, I do have it on a low quality. Apologize for that. Okay, so now you can see it, but I mean, it's like it's in this weird, pipe delimited text file form. You can't really see it because that's the bottom. It's at the bottom. I don't know.
Next one, 41,000. Next one, 708,000 right here. Okay. And by the way, before I continue, it's the settlement date. This, I don't know what it means. I'll research it. Probably just the ID, the symbol, quantity of fails, and the description and the price, right? So description is just going to show you the company name. So AMC, 140,000, 41,000, 708,000, 4,000, 438,000, 11,000, 64,000, 3,600, 405,000.
Right.
So
right
if you combine all of those within that time frame, right? So all those dates combined.
Nope.
You would get
bingo right there. Did you catch that? Did you catch that? I'm gonna go back. He said he did all this reading. He said he did all this reading, and I'm gonna let me put this out there too. I did not watch this video before I started live streaming this. I saw that he was talking about FTDs, and I thought, oh, let's check it out and see what he says. And like clockwork, it appears that he is misinterpreting this data. Let me just go back just a little bit here so we can hear what he says.
38,000, 11,000, 64,000, 3,600, 405,000. So if you combine all of those within that time frame, right? So all those dates combined, you would get several million FTDs. Just December, right?
And right there is the error. Because remember, it's not a daily amount of fails, it's a combined figure that includes new fails on the reporting day as well as existing fails. So you don't add them up. In other words, they're doing that for you. They're telling you on this day, this number exists. The next day, this number exists. On the next day, this number exists. You can't add those together. Adding those together yields meaningless data. It doesn't tell you anything. It doesn't tell you anything because each day is already a net number that has been added and subtracted from. I hope that makes sense. I just lost several viewers, which means that they're pissed. Usually is what that means when I drop some hard truth on the apes. Viewers fall off because they don't want to hear the truth. Well, there it is. One more time.
Within that time frame, right? So all those dates combined, you would get several million FTDs. Just December, right? Just the second half of December, or no, that's only November. I'm sorry.
No, it's not even November. That's not even right. We saw it here. He read off these numbers, 708,000. Remember, he read these numbers off. That's December. That's December. So what he's doing, so he is so uninformed. I can't believe this guy would have the balls to go on there and say, oh, I did all this research today. I did all this reading, and then literally fuck up every aspect of what he is talking about. Literally. So he's looking at these where it says February first half, January second half. He's thinking that these are, he's thinking that this is the reporting date. And I just lost another viewer. Good. Because, you know, nobody wants to be fact checked. Oh my God. So that tells me we're going in the right direction here. Viewers drop off. I'm happy. Okay. So February first half, you know, here, this is this file. I'm not going to open it, but so what does it say? It says the first half of a given month is available at the end of the month. So the first half of February is available at the end of February, which we're essentially at now. So he's taking this and saying, oh, February, first half, so that must mean January. Remember he said that when he was like, oh, so I'll look at December because that will be November. No, the indicated month is the month that is the data that is given. And all you would have to do, really, this is just so sloppy. All you would have to do, really, is look at the date right here. It says 12/08/2021 right there. That's the date. So, but, you know, he sees these big numbers, sees the big numbers, and that gets him excited. And he thinks, he knows he can put out a video and hype it up because he's figured it out. And it's like, I mean, I was talking about this shit last year, that these guys were misinterpreting it. Not Rico, because he was not nowhere. He was, I don't remember when he started his channel, but, you know, he wasn't on my radar. But, I mean, I talked about this for sure. And the fact that FTDs are really a non-issue. They're really, it's a dead end, another dead end. But it's not necessarily a dead end when you don't represent it factually. You don't represent it accurately. Okay, so yeah, we can see that these are, clearly these are December numbers. We saw it here. We saw these same numbers here. Yep, 12/08. So this is very sloppy, very disingenuous. You know, this is negligent more so than fraudulent, I think, in this particular case, because he has not done his due diligence whatsoever. He is completely neglecting his duty to actually understand this stuff before he is presenting it as a bull catalyst. I mean, this strikes at the fundamental core of the problem that I have with this movement, this narrative, these influencers, this group of investors, because they will see this. They won't see my video, or if they were watching, just lost another viewer. Good. If you do see something that I put out about this, you have been so emotionally conditioned. A lot of these people have been emotionally conditioned to instantly react negatively, or turn it off, or not believe it, or call me a hedgie, call me a shill. No, I'm not shill. I'm not a hedgie. I'm just someone who actually reads the descriptions of things. Someone who actually seeks to understand the truth, not interpret it as something that will back my preconceived, previously held beliefs that, oh yeah, this is going to squeeze. Of course and so everything I look for then is going to support that. That is the only way that you could make this many mistakes in less than 5 minutes of a video. Less than 5 minutes of a video. So, again, you don't add fail to deliver numbers together. The numbers that are reported each day are already aggregate net numbers. They include new ones. They remove ones that were covered. Bingo, you have a new number that says on this day there were this many outstanding. Next day, there were some added, some removed. Now there are this many outstanding. And so on every day. It's like a running total a running total. That's the best way to think about it. Running total. This is one of the most sloppy and ignorant takes on this that I have seen in quite a while. It's very brazen. He's so confident. This is Dunning-Kruger in action right here. This gentleman is Dunning-Kruger. He's at the very front of the curve where he still doesn't know shit and he thinks he knows everything. Okay, so I'm not even really keen on watching much more of this video. 5 minutes in, he's already shown me that he doesn't know what he's talking about, which I had a feeling of.
11,000, 64,000.
But we'll see, we'll see where I'll give it a little bit more, but there's really no point.
3,600, 405,000. So if you combine all of those within that time frame, right? So all those dates combined, you would get several million FTDs. Just December, right?
By the way, hit the like button. We need more exposure on this, not because I'm going to get anything out of it, but because we need more people to start making these realizations, start making these connections, start realizing that they are being misled. They are willfully suspending their God-given intelligence in order to keep latching on to this ape narrative. And, the reality is, that's foolish, because it's mostly an emotional movement. It's emotional argument. And whenever you let emotions control your investing and critical thinking, well, that ends up bad. So, this is endemic to this community. So hit the like button. Let's try to get more people in here, if possible. If you can't hit the like button, I understand. I get it. I understand. Let's see. Yep, I don't know how they do that, Lynn. I don't know, but it's. I mean, I know people like my father is like that. My father is like that. He's a conservative man. There's another like. That's what I like to see. He's a conservative, and we don't see eye to eye on pretty much anything when it comes to politics and cultural issues and things like that. So he'll just literally, it's the ostrich effect, right? It's the ostrich effect. Just bury your head in the sand. Just, cover your ears, put your finger in your ears and scream like a toddler. And there you go. I don't know. It's just, I think it is also, it's a sign of entitlement, potentially, like you just expect to be right and you're always right. So I was just going to assume I'm right. I don't know. I can't kid myself that much. I cannot, I know, I try to be honest with myself about this shit, about, most things. Like, I don't want to tell myself what I want to hear. I want to, I hope that what I believe is true, if it's something like that. But if I empirically know that it's not, it's better to be honest with yourself. It's better to be honest with yourself rather than, run the risk of really making some foolish decisions. Because, and you get what you pay for. You get what you pay for. If you buy into something that's popular like this, and he's not even really that popular though, is he? But he's more popular than I am. But what is popular is not always right. What is right is not always popular. So consider yourselves part of an exclusive community of truth seekers, I guess. Like, you're getting information. I don't know who else is talking about this at this point. Who else is saying it? Now, if I know, my friend Tony DENARO, probably, I mean, I don't know if he has. I don't really care to look, but it seems like something he would say. And I brought this up to him before, I believe, when he was in my chat once last year. But it seems like something that Tony could talk about. He seems to be interested in fact checking now, all of a sudden. So, yeah, fact check the FTDs. They're all misinterpreting it. I'll give it a little bit more, and we'll move on because this is bad.
The second half of December, or no, that's only November. I'm sorry, that's only November.
And we literally saw where it was literally December, but he didn't even look at the text files, dates on the entries. That's a good job, Rico.
Let's go into the December ones, which should be this one, and this one. So this one will show the second half of December.
No, it won't.
I just want to be fully transparent of what's going on. This is absolutely incredible how many FTDs there are. It's insane. Okay, December, 212,000, 74,000, 54,000, right? It's highlighted in blue. 400.
I mean, here he goes.
39,000, 80,000, 108,000, 170,000, 338,000, 1,000, that doesn't matter, 42,000, and then 1,000. That's December, right?
So the interesting thing about that is, let me go back to where he just ended. So he said 1,000. It was actually 984. He rounded up to 1,000. That's okay. It's all right. But when you see, and you can really see this when you look at the chart of FTDs. So let me zoom in on that region here. And you see these like clusters of bars that come up. So when you zoom in, obviously it's changing the scale. So the scale goes up to 800,000 there. But when I zoom out, it jumps up. The scale now goes up to 108 or 1.8 million. So that's why it's changing, obviously. But so there's no in full transparency. So what do you see in December? At the end of November, right? There were 6,000 fails on the books, and that's how I'm gonna say it. Fails on the books, because that's what this number is telling you. So 6,000 fails on the books. Then it went up to 139,000 fails on the books. Then it went down to 41,000 fails on the books. So what this is, it starts slow. There were more, and then most, a lot of those were covered, and then there were more, and then they were covered, because if you go from 12.3, where you had 708,000 on the books, you had 708,000 on the books on 12.3, and then on 12.6 you had 4,000 on the books. That means that a lot, that's that 600 whatever thousand that were covered that day. That means that these are no longer, you cannot add these together with any of these other bars, because they now, from this 12.3 bar to the 12.6 bar, they no longer exist. They've been fulfilled. They've been covered. That's what that means. That's what it means when they're net. It's a net cumulative number. So what you see is the numbers go up and down. You see it, here it's 11,063, 3. 405, 212, 74, 54. So that is a period where you had net covering of FTDs. 438, 79. So a spike up and down. Here is an uptrend of 79, 108, 169, 337, and then 1,000. So again, you had 337,000 on this day. The next day, literally the next day, there's only 1,000. Well, those were covered then. That's what that means. So, and if you notice, I don't know if you can notice on this, but I think you can, that it tends to be the months begin and end. The months begin and end with low numbers. So, in other words, typically, that's what I'm noticing here. And you can see it here towards, October starts out, It adds some, and then at the end of October here, it's down to 6,000 again. Same thing happens in November, end up here at the end, 6,000. December, same thing, starts out low, lower, and ends the year with less than 1,000. So you see that kind of monthly cycle thing happening. Not always exact, but generally speaking. But you see, and I don't know, it would be nice if you could put on here is this a moving average of the fails? I think it is. It looks like it is, yeah. Yep, it is. So of course, zoomed out that far, you can't really see, you can't really tell. And I don't know. Okay, it's 10. I can change it. Wow, okay, cool. Okay, so I guess I have to put a line on, but I don't want to turn it off for a second, but I guess I can't do that. But maybe if I do this, it's really visible. I don't know. But, you can see I shortened this moving average, so it's more responsive. So you see this up and down thing, and that's what you got on FTDs. So, and we just lost a bunch of viewers, so we're spitting some facts here. Okay, let me check out the chat. Judge Warhol's here. Have I seen the Short Squeeze channel? Yeah, I have. I watched that video, and of course, there are some, there's some the aspects of those types of videos that are certainly true. But at the end of the day, the Short Squeeze channel is pushing the MOAS narrative. They're still pushing the same narrative, essentially. So, but yeah, and funnily enough, if you remember when the Kansas 5 had their meeting, their Solarium Summit in Kansas last summer, Trey harkened back to his interview with Charles Payne, where he said that the biggest threat to the ape community is infiltration and kind of the community being split apart, and kind of what you're seeing now. I mean, not because of what we're doing, not because of the facts themselves, but because the influencers are becoming more desperate. And so the claims and the justifications and these catalysts, these fake catalysts, are becoming more desperate and oversold, if you will. Like, Rico can't even, this is one of the worst videos I've seen ever about AMC, because he doesn't even try. He makes no attempt, none. He just wants to say, oh, the price should go up, and here I've got a bunch of big numbers. I call this large number theory. Let me show you a bunch of huge numbers that you can't possibly conceive of. There's way more FTDs than fingers you have. You can't count on your hands. So our brains, it's sort of irrational how large these numbers are. They're not things that we work with on a regular basis. So our brains kind of just it's kind of a wow factor, So the ape influencers play off of that. They play off of that cognitive bias, really. So let's see. Am I interested in crypto? Not really, not really. Although I did recently find something interesting. I'll get to that because I do have a little piece here on that on crypto. But that reminds me, I'm going to bring this up again because now there's more viewers. This is two securities here, one in the candles and one in this orange line. I made a screenshot so I could purposefully hide what securities these are. You can probably guess what one of them is, probably. But these two, I just happened to notice these two securities had a very strong correlation, positive beta, if you will. But I mean, I'm curious if anybody has any guesses as to what two securities this could be. I showed it earlier, but then my internet connection kind of failed, so I had to restart the stream. But I'm just going to put it out there again because I was very surprised to see this type of correlation between these two securities. So we'll come back to that. Momentarily. So anyway, again, just to kind of summarize this FTD thing, and again, this is the point, really kind of the point and title of this video. Everything old is new again. This is a cyclical thing, not the FTDs. The FTDs are, yes, the FTDs are cyclical too, but the fake catalysts are cyclical. I'll give you another example. I can probably find it in the AMC search results, actually. Probably just find it here. So, we have the FTDs, of course. But here it is. Credit Suisse's margin calling investors. Margin calls. Margin calls. Margin calls are coming. Margin calls soon. Margin calls incoming? Yes. Every 2-3 months, margin calls make the rounds. Every 2 to 3 months, FTDs make the rounds. Every 2 to 3 months, going along with 13F filing season, corporate earnings season, investors are piling into AMC, institutions are buying AMC, yada yada yada. What else we got? Oh, of course, the regulations, new regulations, that short sellers are in trouble, the DOJ is coming after them, okay, fail to deliver. They will shut down trading. Yep. Hedge funds are going to lose everything. It's just all the corrupt financial cycle. How about the corrupt AMC influencer cycle? So this is Trey, the macroeconomics expert. The only meth head macroeconomic experts that I know, but whatever. He's unbearable anymore these days. I can't stand him. I just can't, yeah, 90% of the float. Oh, that's another cyclical catalyst. Apes own the float. Retail owns the float. At first it was over 80%. Or at first it was 80%. Then it was over 80%. Now it's over 90%. And we know that that's not true. I mean, we don't really need to look farther than our brokerage, Fidelity, which, by the way, in full transparency, it's up to 54.5. It was 54.4. And before that, it was 54.5. It went down to 54.4. It's back up to 54.5. So good job, apes. You gained that 0.1% back. That's buying the dip. Good job. I don't know if anybody saw recently, Jon Stewart Jon Stewart's podcast. It's called The Problem with Jon Stewart. He recently did an episode about the stock market. There are a few clips. He talks to a former SEC commissioner. He talks to a couple other people. And he mentions the APES. And he mentions the GameStop short squeeze. And he's talking about Wall Street corruption. And it's worth checking out. It's not, I think that, I'm not going to say he's wrong about anything, because he brings up valid concerns. Of course, the valid concerns that I think are valid, aren't the same as what the APES necessarily think are valid. In other words, or hedge fund reporting short positions, I don't really care. I'm not trying to invest by seeking out short squeezes. So, that's not really a concern of mine. Yeah, it could be better reported, but it's not like I'm not going to intentionally blow up my account to make some point that, see, we should have better transparency. It makes no sense. And it doesn't, it's a non sequitur. Those things don't really correlate that way. But more so and not even payment for order flow so much. Although I do think that obviously there's some weirdness there. There's some, this market maker internalization model. They've been very, very cunning and crafty to make sure that they can say that it is benefiting retail investors. That's the thing. They can say that. And it's true to a certain extent. To a certain extent. It has allowed commission-free trading to happen, because brokerages are for-profit entities. The exchanges are for-profit entities. Citadel is a for-profit entity, the market makers. So everybody's trying to get a piece of it. And investors are trying to grow their portfolios as well. And the publicly traded companies are trying to raise capital. So you have all of these different participants. Meanwhile, the market itself, the model of the market is, let's grab a little bit of each trade and do that millions of times per second on every security, and we're going to cash in. And yeah, your execution, your order fills might be a little bit worse. They might not be. You might not get the best price you're at least going to get the national best bidder offer, because you have to by law, by regulation. But should companies like this be making billions of dollars from retail trading? Should it be, should this exist, that all of these, if you think about it, really, all these AMC pumpers, all they're doing, they're lining their pockets, yes. They are putting money in their pockets from their ad revenue, from their channel memberships, from their whatever, trading discords, whatever the hell you can give them money for. They're making money from it. But they're also driving revenue right back to Citadel and the brokerages. It would be interesting to know how much money was made off of retail trading in just the first half of 2021, with all of the trading in GameStop, AMC, meme stocks, and all that. And that's just stocks. Don't even get me started on options. That's where they really made their money. Oh my God. And we've talked about that a lot. So anyway, But that is definitely something that, like, I'm not focused on that. I know that I can be profitable in the market, and that, payment for order flow or not, I try to win more trades than lose more trades. Try to win more than I lose. Doesn't always happen, but I'm getting better. It's a work in progress. That's fine. High frequency trading. If you have a small account, you can only make 3-day trades in a 5-day rolling period. Okay, fine. That's to protect you, they say. That's a FINRA thing. That's a FINRA thing. That's to protect you. Meanwhile, Citadel, high-frequency trading operations, market makers, etc. Now, they have a lot more capital to play with, yes, but they're also running on extreme amounts of margin and leverage. So, and whose individual capital is on the line there? If you're talking about a corporation, an LLC, or whoever, well, there's a barrier of liability there. So it's not really, it's not really going to come out of one person's ass if, whatever, the way it would if an individual retail investor blows up his or her account. That's his money personally that is on the line. So in that sense, why do you care? Why does the market care if I can make as many day trades as I want and potentially blow up my account? I can lose all my money. Why would they care? Why would they care? Why would they not want you to do that? Well, I submit, this is my opinion, but I submit that it is not because they want to protect you from losing money. The market wants to protect itself from losing money, or in other words, they want to protect you from making money. Because if you could enter and exit a trade and have it settle immediately and have the money back in your margin account, your small margin account that's less than $25,000, and make a bunch of those trades, if you could make as many trades as Citadel makes, would it? Two questions. Number one, would that be a more level playing field? And number two, would Wall Street be able to be able to fleece investors and traders, uninformed investors and uninformed traders, as easily? Maybe, but a lot of people would also make a lot of money, I think. So I think the pattern day trading rule I think it's bullshit. I think that, if anything, the APES should have made that part of their Bill of Rights, their Declaration of Independence, whatever. But there was no formal thing. That's another problem. Like, you want to have a movement, you need to have some, like, a manifesto that's like an actual, well-written, researched, sourced thing that's like, we're not paying taxes for this tea because fuck King George, like something like that. Pattern day trading should have been essential to this, in my opinion. Like, it is not there. I understand in the past maybe settlement would have been an issue, but we're already down to 2 days. They're talking about taking it down to 1. It's going to go to instant settlement at some point. And, even with T+2, free riding is the concern. I don't know. But anyway, if you're on a margin account, you should be able to do it. Let's see here. We got, in the current situation, poor or bad information pays much more than good. And responsibility between traders and brokerage houses was lost when they went to all zero commission. Yeah. And, for that matter, and that coincides with the payment for order flow model. Because, now brokerages can, it really is and I don't take this the wrong way to mean that I like it and that I think it's all good, but it really was a great fucking idea. And it's really no wonder that it was that Bernie Madoff came up with it. That's a manipulator. That's somebody who knows how to spin shit, knows how to sell you some bullshit and tell you that it's the greatest thing since sliced bread. And that's what we have. Because Wall Street won with that. And they all made a shitload of money. And they can turn around to retail investors and say, hey, look, you can trade for free now. Now, never mind, you're going to lose money almost every time, but you can trade for free now. I don't know what the answer, and there's really nothing on that Jon Stewart show episode that I saw that was really very, it was all stuff that we already know, and it's stuff that, like, there were no suggestions, there was no vision, there was no, like, well, this is the way it should be. Yeah, you can talk about the way it was in the past, but it's not going to be the way it was in the past. Like, that's the point. It has changed, and it needs to evolve again. They really didn't go into that too much, or if at all. So that's my criticism of it. But hey, any press on that is probably good. But ultimately, the problem is, it's not surprising, money. And particularly, Wall Street has a shitload of it. And with that money, they can buy the best high-power lawyers and lobbyists that they can. And that pretty much guarantees that they will prevail any fight. In fact, that former SEC commissioner talks about when he was in the SEC, they made a proposal to require, or to basically to make the markets, the exchanges, market participants, mainly the exchanges, that they should not be for-profit entities. Like, why is the New York Stock Exchange a for-profit company? Isn't their job to facilitate trading of public companies? Why are they in business to make money? And that is going to taint, that is going to color, that is going to influence what they do to drive that, not efficiency and fairness and transparency and etc. for all market participants. So, that would probably be a good place to start. Why is somebody like Citadel allowed to, another problem, I would go down the Citadel route, but I don't really want to, because that's just, it's just. But the SEC themselves, they're underfunded. They don't have the staff. They don't have the technology. They literally don't have the technology to monitor Citadel. Now, think about that. You have a regulatory agency that is completely unequipped and ill-prepared and unable to carry out its duties of overseeing the market. That is mind-blowing, but not surprising, because Citadel and other market makers and institutions, they make a lot of money. They make a lot of money that the SEC wish it got in taxpayer money to fund its operation. So Citadel can invest in technology, in personnel, in all these different areas that have given rise to high frequency trading. The SEC, I bet I have a feeling that the SEC, FINRA, these regulatory agencies, they don't really even fucking understand what is going on. They do in a general sense, but for in a technical sense, they don't have technology that's equal to what these institutions have. They don't. So, by definition, they are in the dark about what is happening. They are in the dark about it, and so it really seems like it is a Wild West. Citadel, who the fuck knows what's on Citadel, how their shit is programmed? There is nobody at the SEC. As Maverick says, the SEC remains in a coma. There is nobody checking that. Do they have somebody who even could know where to start with that? I don't know. I would say probably not, in my opinion. It doesn't seem like it. It doesn't seem like it. But another thing, too, nobody wants to be known as the person who made the stock market go down. So the stock market kind of, in general goes up. So funding the SEC, cracking down on, illegal activity and whatever, manipulation, which they do a lot of. They bring several hundred, if not thousands, of regulatory actions every year. But we're talking about fundamentals of the market here, like the structure itself. It's patched together. It's a hacked together, patched together collection of disparate units that is intentionally confusing. It's intentionally non-transparent, and to bring it all, it's not that they don't have the money, Wall Street. It's that it's easier and more profitable for them to take the fines and continue with business as usual. And the SEC allows that to happen. And I think at the end of the day, really, they're failing in their duty, their mandate. But again, I don't focus on these things because, yes, it is unfair. Yes, it is the most sleazy. It's the sleaziest, most derelict collection of scumbags that you could ever assemble. That's Wall Street. No doubt. No doubt. They are a bunch of fucking scumbags. But at the end of the day, you're talking about a system that is within the capitalist economic society. So, of course, it is going to be fueled by greed. Of course, it is going to be cutthroat and dog eat dog and brutal and ruthless. Of course it is. Why wouldn't it be? So, if you know that and you understand, at least on some level, yeah, these guys are running some game. They are running game. Just like Clay Davis in The Wire. But if you know that going in, then you can figure out what the hell the game is. In other words, like when you're talking to somebody and, somebody asks you a question about yourself or, something, and, you can respond if it's an acquaintance or somebody you don't know. You can respond 100% honestly, and you can say, you can go into this long-winded story about, whatever. Or you can cut it down and you can bullshit. Essentially, that's what I'm saying. You can bullshit somebody. And that's what the market is. It's a bunch of scumbags bullshitting each other and the public. There's a bunch of sleazy bullshitting. The apes, for some reason, are coming into this as, these righteous, the white knights in the market. Oh, guys, this is unfair. Guys, no, you cheated. He cheated. Okay. Yeah. Maybe they did. But you're not going to get very far doing that. You're not going to get far because the people that you are trying to tell, people you're trying to bring this up to are part of the same corrupt system. The same corrupt capitalist society that is dominated by lobbyists and lawyers. Do you think really think any of the lawsuits that the apes or have been filed on behalf of the apes, they've, with the exception of a couple early on about the GameStop trading halt or position closing only, there was one lawsuit that actually did succeed. But other than that one, and probably a couple others that I'm not aware of, every lawsuit has failed. That's no coincidence. It's just people say they want to know what's on the base of Area 51, but do they really want to know? Well, I see. What you're saying is, correct me if I'm wrong, it is easier to scam people than it is to convince people that they are being scammed. That's what I'm getting out of that. In other words, yeah, everybody wants to know what's on Area 51, but when they get there, would they actually follow through with it? I don't know. We don't really want to know how bad the stock market is. I think some people do, but I think the better choice is to just, if it upsets you that much, and my girlfriend says this to me when I'm, I get home from work and I got like 45 minutes till the market closes or something like that, and I'm sitting here like yelling, screaming at this computer screen, God damn it, fuck you, mother, I'm like, just, she's like, if it's more worry, and if it elicits that response from you, maybe you should not do it. Maybe you should take a break. I'm like, no, it's okay. I'm just trying to get in character. I'm just trying to, I don't know, relieve some frustration. I don't know, but at the end of the day, like, it doesn't really affect me. I just also just kind of play it up. But there are people that, how many times have you seen this one over on Reddit? And I got something I want to look at on Reddit here too. After the MOAS, I'm not participating in this market again. Well, first of all, like, logical thinking would tell me, if you got $1.6 million per share, which is what they believe on Reddit, by the way. That's what they're saying on Reddit these days. Even if you have 100 shares, okay, you're not going to ever need to participate in the fucking market again. So who cares if you're not going to? First of all. Secondly, well, it's not going to happen. But third, the market doesn't give a fuck if you participate in it or not. It's not. It does not care. It doesn't care one way or another, because there are plenty of people who do think they can beat the system, and they think they're smarter than, the system. And some of them may be, but it's not an issue of intelligence. It's an issue of understanding what's actually happening. It's an issue of, this is the classic Dunning-Kruger, You can't read a book, you can't read a post on Reddit and know everything about anything. And we have, unfortunately, and there's a lot of people that are, quote-unquote, in my generation that would be, part of this too. But and there are a lot of people this is a cross-generational thing. This is really a great uniter. Unfortunately, it's the worst kind of thing that could unite generations together. A scam, but whatever, I guess if it brings boomers and zoomers together, can it be all that bad? And but there are a lot of people who just don't have a lot of experience in pretty much anything business related. And, I don't understand how you think that you could enter any field. Let's just say a new job. You've never done this job before. You get a new job. You come in the first week, you start running your mouth. Second week, you're talking about how, we need to change this. We need to do this differently. Third week, it's like, well, this is illegal. I mean, this is fraud. I mean, and I would say maybe actually like get some experience, because maybe you don't understand everything that goes into this. Maybe what you see on the outside looks like that, right? But you don't know how, anything about the depth of the structure of how this business operates. So just do your job first. Learn your job, and slowly learn other bits of the company and the business. And, then in 2 years, let's have a conversation, and you tell me whether you still think that, X, Y, and Z, that you came in here the second week you worked here and you were bitching about. I've had experiences like that with jobs. So, not... Anyway. And that notion of I only have 50 shares, I need everybody to hold for me. Well, that's... If I can't believe that people would, put that much faith in random strangers on the internet, first of all. But secondly, my ability to make money doesn't give a fuck what my neighbor is doing, what the next investor is doing, what my retail investing peers. I don't care what the fuck they are doing. And I don't even want to know most of the time. Stock twits? Hell no. No use for that. Twitter, maybe to get some sort of sentiment, but I mean, really, no, I don't care. I don't care. And I don't think that most people should care. It works for me sometimes, and I'm not saying that it's not useful to know what the sentiment is, but to stake your entire claim on, oh, well, I only need to buy 5 shares because these people are going to hold for me. No, they're not. They're not going to hold for you. That should be the assumption. The assumption should be, my neighbor is going to fuck me, so I'm going to make sure that I don't get fucked, and I probably will end up fucking him or her in the screwed over sense of the word. So but certainly it should not be like, oh, we're all going to hold together so that we all profit together. That type of thing may come about because, okay, there's a lot of people who like Tesla, so there's a lot of people holding Tesla. That's different, though. That's not what we're talking about here. We're talking about long shot plays like, oh, we're all going to hold, AMC or Sundial or whatever. It doesn't matter what anyone else is doing on both sides. In other words, you can't be dependent on somebody else to do something to make you profitable, and you losing money it has nothing to do with anybody else's position but yours. That's why, that's a big thing that the apes don't understand about short selling. I mean, I don't really want to get into it right now, but I mean, there are every misconception and misunderstanding and just ignorant belief about short selling you can find in this AMC community. You can probably see it right here on Reddit. But, yeah, so the Reddit thing that I have here that I want to talk... So I'm done with Rico. I'm done with this clown. This guy's a clown. In closing for this, I mean, read the freaking paragraphs on the SEC site first. Read about the dates, interpret the dates properly, and by God, understand that these are not numbers that you can add together to give you a monthly figure. That's not how it works, buddy. Not how it works whatsoever. Now, if it's just, they're cumulative numbers. I mean, it's a pretty basic thing. I don't know. So check this out. So this is on Reddit. And they say, what new kind of crime is this? And by the way, the arrogance to not understand something, to not understand a concept or a business or, you know, a function of something, and to automatically assume that is crime. It must be criminal because I don't understand it. Imagine thinking that way. Imagine it. I mean, and then do not ever think that way again. But when your wife is crying, I didn't mean to, you know, burst the hope bubble. I mean, you should have seen how, you know, I mean, Lynn can tell you, my first channel was way more aggressive. I mean, it was really aggressive at times. And I tried to tone it down, and I didn't succeed all that well. But you know, after getting slapped in the wrist and, you know, not wanting to have that happen again, I've tried to dial it back a little bit. But sometimes it slips through. But, you know, this stuff just, I mean, it's amazing. It really is amazing. And I try not to be emotional, even though I'm a big emotional wreck. But yeah, it's just so absurd. What new crime is this? What kind of new crime is this? I bought 3,500 shares, not sold. So, well, okay. They believe in naked shorts. They have the naked shorts, what is that called? Flare. I'm going to need to see more of your flare. Submitted by your wife's boyfriend. And look at all these medals and awards that they have on this fucking thing. Like, this was popular, so, you know. Anyway, so they have order filled, Fidelity, order to buy 3,500 shares at 16.535. I mean, how much money is that anyway? That's kind of a lot of money, isn't it? It's over $56,000. I mean, that's more money than I make in a year. I mean, who knows if this may not even be a real screenshot. Who the hell knows, right? But let's just assume that it is. So they have this order to buy at 16.535 of AMC. So we go to the next screenshot here, and we see a screenshot of the time and sales window. This is actually from Thinkorswim. This is the Thinkorswim time and sales log. So we have the time, the price, execution, and the number of shares. And you see some of these are color-coded green, some are red. So it's like Christmas here. And they've highlighted what they say is their order. So this is like the journal tape in the cash register. If you remember, the old school cash registers had two rolls of tape. One printed out the receipt that you tore off and gave the customer, and the other one just looped back into the machine, and it was the journal tape. And you take that out, and that goes to accounting, and they, you know, use it for auditing. It keeps a track of every transaction, every no sale, you know, all that stuff. So that's what this is, basically, the time and sales window. So the Z tape, there you go. Yeah, right. Wow, I haven't thought about that, but yeah. So they've highlighted what they say is their order, and so some of these are color coded. Well, they're all color coded. Some are green, some are red. Now, you can't really tell from. I guess you sort of can tell from this, but if you notice that all of the green entries are basically 1654. 1653.99. I mean, come on, give me a freaking break. 16.5399. Okay, that's some bullshit right there. Citadel made what is that? 1/10,000th of a cent, or whoever. I don't want to accuse anybody. 1/10,000th of a penny. Anyway, that's not the point. Point is that the green entries are essentially buy orders. So that's the bid price. I'm sorry, that's the ask price. And the red entries are going to be sell orders or the bid price. Now, but not always. Not always, because I said, I guess, whoever, this person said that they bought AMC at 16.535. Okay, then they show this over here, but it's in red. So, how is that possible that you would have, this buy order, which should be green, because your buys are in green, your sells are in red, and that makes sense, right? Buying going up, green candles, selling going down, red candles. So that's the correlation, in case you didn't get it. Now, but it shows it in red. It shows it in red, and so the implication is, well, they're presenting my order to buy shares as if it were an order to sell shares, and that must be illegal. What new kind of crime is this? I bought these shares, not sold them. They literally reversed it, and that's why the price is so low, because they're marking buys as sells. And so I saw this, and by the way, hit the like button on this video. Everybody who's watching this has not hit the like button. I can tell based on the time and sales. Some of those likes are red, and they should all be green. So hit the like button. Let's get more people here. But I saw this and I'm like, okay, well, I'm the asshole who actually will go to the time and sales window myself and look at this and see and try to make sense of this, because I don't think anybody else did here. But anyway, so I did that, but I did it in Fidelity, because I don't know. Again, this is Fidelity. This is a picture of the window of Thinkorswim on the computer. So I don't know, whatever. But I went to Fidelity Active Trader Pro, and they have a better time and sales window than Thinkorswim does. And I pulled it up. So here's the screenshot from it. So you can see what I did was I filtered it down. So 3/4/22 between 357 and 358 on the 4th. I just left all prices, all exchanges, and I changed the size to 3,500 shares. So I just wanted to see that one print. So I'm looking in 1 minute of trading for one specific order size, and here it is. So 15:57 and 17 seconds, 15:57 and 17 seconds, there it is. So, and indeed, it is 16.535. It is 3,500 shares, and it is in between the bid and ask price. So that's price improvement, because you should be able to, and thank you for the likes, appreciate it, got a couple there, very much appreciated. The ask price is the immediate buy price. So if you want to buy something, you can buy it at the ask price. Legally, they have to sell it to you. If you want to sell something, you sell it at the bid price. They have to take the order. But sometimes you can get a price in between the bid and the ask price, and that would be, in the spread, so to speak. So this order is, it is right in the middle of the bid price and the ask price, right? It's true. And on Fidelity, in time and sales, if it's in between the bid and the ask price, they make the print white. So you can see that it is in between. And it's harder to tell whether that's a buy order or a sell order. The red and the green ones, now look, the ask price is $16.54, the bid price is $16.53. So you can buy it for 1 cent higher than you could sell it. So if you buy or sell on those prices, the market maker is going to make 1 cent. So we come back to this, we can see that the green ones are $16.54. Those are the ask prices. I mean, this one is 1/10,000th of a cent off. I don't know why. Maybe it's supposed to be $16.54 and it's just whatever. But essentially, those are your buys and your reds are your sells. And those are roughly at the ones that are at, let's see, the ones that are at $16.53, that's the bid price. There's $16.53.01. I mean, but on Fidelity, those ones that are in between the bid and the ask would be white like this. So it could be a buy or it could be a sell. You don't really know. Sometimes there are, other context clues you can use, but in any case, we know in this case that it was a buy order because our friendly ape said it was, and we have the screenshot. So let's take him at his word. Now, but the more interesting thing here, so, that's just something that you can understand if you wanted to. Was a trade on an uptick or downtick? I do not know. That I do not know. But you could probably, if you looked through the time and sales, you could potentially figure that out. But so it's interesting because it's like, okay, yeah, it's not crime. You literally got price improvement. You literally paid half a cent less than the ask price to buy these shares. Yet you are so uninformed, so uneducated, so ignorant that you assume that it's some new kind of crime. I mean, literally, you don't understand what you are doing. This is someone who should not have dropped $56,000 fucking dollars on this bullshit stock. I'm sorry, but this is a sign that you are going to lose most of that money. And if I'm being honest, you deserve to. If you are that uninformed, where you literally got price improvement on your fucking $56,000 order, but you assume that it's crime. So they color their time and sales by up or down tick. So I don't know if that, I mean, I understand what you're saying, but that's not how most time and sales work. Like it would compare the execution price to the bid and ask price that were quoted on that order, and if it was executed at the ask price, it would be green and indicate a buy order, and if it matched the bid price, it would be red and it would indicate a sell order, and if it was in between those two prices, it would be white. It would indicate that it was executed in the middle, and it would be, you can't really tell, or it could be executed above the ask price or below the bid price. Sometimes time and sales have a different color for above the ask or below the bid, or vice versa, I guess, or no, not vice versa. Yeah, Schwab's platform has different color coding for that, but typically it's that, and not comparing the that price to the tick direction. But I want to say that AMC was. Let me go over here and look and see. So that was 357. I mean, generally speaking, I mean, I don't, we'd have to. It would be more. I'm not going to go any more further than this, but I mean, it was a green candle. That's not the same thing, but it was in and up. It was in that like last ditch desperate uptrend at the end of the day there. But I have to, I don't know how Thinkorswim does it. Maybe they do it like that. I know, but I just know that most, at least Fidelity's is not like that. So, but anyway, that's not even the point, though. That's not even the point of bringing this up, though. So that's just all preface. I mean, because trust me, this is good. That's all just preamble to, say like, okay, here's an uninformed ape. Here's another uninformed retail investor dropping, tens of thousands of dollars on this stupid fucking stock, and they don't understand what they're looking at here, and yada, 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 right? That's enough. That would be enough to talk about. But, oh no, I got one better. So, going back to this time and sales here. Let's look at this time and sales. So, we went through here. Time, price, last size, bid price, ask price. But I skipped over this particular column here that says last. I have skipped this column that says last. And I skipped the bid exchange and ask exchange and the bid size and ask size. Now, I'm not concerned about the bid size and ask size. I'm not even really concerned about the bid exchange and the ask exchange, because this is N for NYSE. So we know that AMC is an NYSE listed stock. So if it were a NASDAQ stock like Apple, it would say Q there. Not always. It could have been quoted from another exchange, but we know what that means. But I'm concerned about this last column here. So what does DF mean? And what is last? So last is basically telling you where the execution venue in which this order was executed. So if it said N, that would mean that this order was executed on the New York Stock Exchange, like it was sent to the exchange. But as we can see, it's not an N. Interesting. Okay. So then the question is, what is DF? And we're on Fidelity. So, I've looked this up before, but I'll go ahead and just do it. Fidelity, time and sales, exchange codes. It should come right up. Time and sales. So here it is, time and sales. And here it goes into the shading or the coloring. Shares traded at or below the bid price will be displayed in red. Shares traded at or above the ask price will be displayed in green. Shares traded between the bid and ask price will be displayed in white. So, time and sales exchange codes. DF, right there at the top. ADF. ADF in NYSE, like we said. Q, NASDAQ, etc. DF. ADF. What's ADF? I don't know. Anybody know what ADF is? So that's the alternate display facility. Alternate display facility. also known as, drumroll, a dark pool. That is a off-exchange print. This ape spent $56,000 on 3,500 AMC shares, got price improvement, paid half a penny less than the ask price, yet they didn't route this order to the exchange. They didn't. Because clearly we can see that the exchange that it was executed in is listed as DF, which means they did buy this on Fidelity. We have the screenshot here. But they didn't specify the exchange. So Fidelity said, oh, hey, you don't care where we send it? Cool. We're going to send it to Fidelity. Fuck it. And we're going to make some money off of it. And that's what they did. So here you have an ape who literally, they use Fidelity. Oh, we're supposed to go to Fidelity, right? Fidelity is good, right? And their order still ended up going off exchange. And they have no clue. And nobody here has any clue. Because they showed you this bullshit time and sales from Thinkorswim, which doesn't tell you anything. And they think that they think that somehow it's a sell order, and they think it's crime. This is the essence of the apes right here. Uninformed from A to Z, top to bottom, 100%. And this person has 56 grand to throw around? Really? Really? I mean, kind of makes, lends a little credence to that adage or concept, of having more money doesn't make you smarter, doesn't mean that you're more skilled. Because clearly this person, that's embarrassing. And believe me, I tried to comment on this, but I logged into my Reddit account, and it will not let me comment. So they blocked me from this thing, from this subreddit. This is Fidelity's price improvement. The one they swear it has nothing to do with payment for order flow, but obviously it has the exact same impact. Well, the problem is it was payment for order flow, because we know it was off exchange based on this actual print here from this. So yeah, fool and his money shall soon part. And that phrase fucking killed it last year. That phrase, it really earned its keep last year. Because these fools handed over money. They still can't wait to hand over $50,000. $50,000. Imagine what you could do with that. And in my opinion, they just flushed it down the drain. You might as well, literally. I mean, if I were independently wealthy, I would make a video where I literally flushed $50,000 down a toilet to show that it's more entertaining than this shit, than buying these shares and thinking that you're getting screwed over. Imagine that. Somebody throwing around money, way too much money, on something stupid, and then bitching about it later because they didn't understand what they did. I mean, these are idiots. These are idiots. And it's embarrassing. And I can't wait, honestly, until this shit is over in some way. But I mean, I'll have to find something else to talk about, I guess. But anyway. So yeah, I thought that was pretty good. Thought that was pretty good because You know, you can't make this shit up. Astro said that a long time ago. You can't make this shit up. Well, no, you can't. He was right. He was right about that. What is old Astro up to these days? Is he still doing his thing? He has to be, right? Once Astro, always Astro. Gotta be. Oh, I gotta put in more than that. Oh, boy. Is that Matt Kors? No, is that Astro? That's Astro. Oh, it's not. Okay, that's Dave Lauer. I don't know why I thought Matt Kors. And you know, here he's talking about operational short selling, how synthetic shares are made. He's that FTD narrative. FTD narrative. Charles Payne talks AMC with Trey trades. I suppose that looks like it's recent. Soon as in immediately.
Borders and boundaries, and we don't let expectations of others hold us back. In fact, for me, it's always been a motivation. I love being the underdog, and while I don't ask for anyone's approval,
listen to that conservative, idealistic narrative. From the moment that you listen to this guy, you can hear the bullshit in what he's saying. I mean, it's really, and it's really amazing to me that the apes actually bought into this guy's bullshit narrative. Yeah, that's right. I mean, bad back. You're right. I mean, they were doing that. They were doing that stuff last fall, and it was like, you know, the stock price was like twice as high. I don't understand how you think that's going to, like, how they think that is going to do anything but screw up their own lives, their own finances. Like, there's going to be some reward for quote-unquote diamond handing. I mean, as far as I can tell, it's pretty much the same as, like, diamond handing. What that really means is the same thing as paper handing. Like, I'm gonna diamond hand, you know, like, you're holding through all this adversity because you believe it's going to go up. What if it fucking doesn't? What if it doesn't? Those diamond hands just turned into paper hands. And so I say they're the same thing. There's really no distinction. Because also, consider this. Diamonds, and this is something that our generation, my generation, knows, because we didn't by and large, we didn't buy into the diamond bullshit. Like, we know that kind of the truth about diamonds, in a way. Like, not as rare as we're led to believe, created by the diamond industry, marketing, capitalism. You know what I'm saying? Like, diamonds are kind of bullshit. And I've been, you know, lucky, I guess, to have not have gotten roped into, you know, spending a lot of money on a diamond ring or something like that. Because, you know, or if that was that movie, Blood Diamond, Blood Diamonds. Yes. So maybe, you know, it's been hiding in plain sight. The simple choice of the word diamond was an indication from the beginning of this frenzy that it was really a narrative that was built on lies. I don't know. Fun to speculate about, but Why did the apes ever trust Charles Payne? He's right along here with all these other charlatans.
I insist on basic respect. Now here's the rub.
Listen to that conservative narrative. I believe in basic respect. But then you'll like literally badmouth somebody from the political left. That's the hypocrisy that I love about Fox News.
Pursuing our dreams, it's easy to be derailed. That's why commitment against long odds creates legends. And doing what they say can't be done makes you a legend.
In other words, diamond handing, right?
Inspiring others is what creates legends. And that's why I love my friends in the investing ape community. They are the personification of America. They have their own idea on how to approach this.
What, a bunch of uninformed idiots? Aggressive assholes who can't ever be told that they're wrong? That's America, who are probably own at least 2 firearms for every child that they have. I mean, and I don't know. That's crazy. That is just garbage narrative. Ugh. Let's just get to the meth head. Jesus Christ, he looks fucking horrible.
Trey, there won't be any elephants in the room in our segment. We know what's going on Twitter and elsewhere. But I don't want to make this about one person, okay? You were on the board to come on today since the beginning of the week to discuss this movement. So, I don't want to necessarily do a feud. What I do want to say is I bought $100,000 worth of GameStop and AMC because I love the apes. And I want to show solidarity. And that's why I think it's so important for naysayers. Don't lose sight of the goal. You know what I mean?
Oh, absolutely, Charles. And people have a pretty good head on their shoulders, intuition in terms of being able to recognize those who do stand up against naysayers and the specific naysayers that might need lawyers. But
you notice that he sounds like he doesn't have that fire in his voice. He doesn't have that energy that he had before. Maybe he's not on meth now, but maybe that's the difference. But like he sounds like it's the same thing. Like TMI sounds like this too. Short the Vic still sounds like no. He still has the pep in his step, but like this just sounds so sad. I mean, the word that's coming to mind, the term that's coming to mind, and pardon my crassness here, is limp dick. This just sounds totally limp dick. Like, yeah, well we have a good shit, and yeah, I'm Charles. This is a sad
head on their shoulders, intuition in terms of.
I mean, listen to this sad fuck.
So important for naysayers. Don't lose sight of the goal. You know what I mean?
Oh, absolutely, Charles. And people have a pretty good head on their shoulders, intuition in terms of being able to recognize those who do stand up against naysayers and the specific naysayers that might need lawyers. But at the end of the day, it's all about exactly what you mentioned. Fighting for your neighbor and trying to make the holiday season a little bit better.
Right.
So
this is old.
Are the personification of the apes.
So this is old. TickrBox cannot. They literally have to put up fucking old clips. Every clip that they put up is an old clip. This is outrageous. Did you hear he said making something about the holidays?
At the end of the day, it's all about exactly what you.
And there's this tree back there.
Your neighbor and trying to make the holiday season a little bit better.
Wow.
And you, by the way, are the personification of the apes, and that's why I love you. I love your story, and I'm glad you always come on. And with that in mind, often what happens is, and this, by the way, is a Wall Street gimmick when they say, how did you perform in a certain year? Because nobody starts from zero, right? Investing is not monopoly. We don't start at go with zero. But it's a Wall Street marketing gimmick. Nevertheless.
No. People who are successful start at go with a fucking pocket full of cash. They start ahead. Charles, conservative fuck. Seriously. Come on.
When a calendar turns, attention spans can wane. People can move on to other things. With that in mind, is there what's next, do you think, with the investing ape movement as we move into 2022? Will it be as strong?
Nope.
My favorite thing that I see kind of get pitched is this idea of the.
Okay, yeah, that's old. so I'm not even going to continue with that. I mean, I couldn't imagine putting up a video where I show a video. Well, first of all, I can't imagine putting up a video that is just a Fox News clip. Like, talk about low quality content. And it was low quality when it came out months ago. And then you're going to, you know, crop it. So you crop out most of the indicators that this is old. And so the copyright thing doesn't catch it. And you don't even put a link to it, you know, nothing, no date, nothing. Oh, yeah, right. Okay. Low quality. Bullshit, lazy, clout chaser. This is, you know, this shit is shameful. And they have, you know, 3,500 subscribers because the apes, you know, they love it. They can't get enough of it. Can't get enough of that synthetic hopium. But I lost my train of thought because it's so ridiculous. But he said, "Is the excitement going to continue in 2022?" Well, we know the answer to that is no. Now we have the benefit of being in the future from there. So how about this? March 3rd, we did a live stream. Excuse me, post MOAS live stream. We had the MOAS on Wednesday. Thursday, the 3rd. So we did it, and the volume on that day was 24 million. 24 million. It's the second lowest volume in the last 3 months. And that tells you everything that you need to know right there, I think. You got a day that was supposed to be hyped up, supposed to be the squeeze, and you ended up having the second worst volume in 3 months. I mean, what else is there to say at this point? I don't know. But anyway, that's all I got, really. I just wanted to address this FTD thing because this is, and it really is this cyclical. Let's see if I can do this before the song ends. Let's see if I can do it. Mother of all meltdowns. Moem. I like that. Let's see. AMC FTD. Let's see what comes up. 5 months ago, Thomas James, 5.9 billion FTD resets exposed. Do you think he understands how these numbers are cumulative? Do you think Thomas James knows? Do you think he's ever taken the time to learn that? Give me a break. Andrew Mo Money, the supposed data scientist, failed to deliver 14 million shares. The supposed data scientist. I would hope that he would know how it works. No, I don't know. AMC FTD at 4 million per day. Unbelievable fee. There's Tony DENARO right there. There's Tony DENARO. What was he saying? You know what? Stop it. Stop the music. Stop. We gotta look. We gotta look here. Wow, he's got...
Hey guys, Tony DENARO here. Thanks for tuning in. What a crazy week with AMC. We're going to talk about if my price prediction I made on Wednesday was correct. And more importantly, we're going to talk about this crazy situation with the FTDs on the AMC stock. Now, we started the week off pretty good, but we had a big rundown Monday, Tuesday, and Wednesday.
This is from July.
With the lows getting as low as $32. And I saw some crazy predictions. People running around with their hair on fire. Other people gleefully suggesting that the stock was over and that it was going to drop into the 20s. And on Wednesday, on my update, I said no. $35.
I don't care. I could not care less what you thought it was and what it ended up as, Tony.
Stock short. They need
Doesn't fucking matter.
loan 101 million and the utilization at 91.31. Now, I want to talk about the failures to deliver, and Matt Kors went over this a little bit on his live stream today, and I thought he's bringing up.
Remember when Matt Kors was actually relevant? Second wind, no, I maybe up until midnight, but I am losing my. I'm tired.
Excellent point that we need to talk about more in detail. Now, I know many of you are familiar with what a FTD or a failure to deliver is, but just in case you're not, when a short seller decides they want to sell a stock short, they need to borrow the shares. So the market maker goes out and finds them the shares to borrow. They go ahead and authorize.
The market maker doesn't find the shares. That's not correct.
Short sale, and they have 2 days, the settlement date, to complete that transaction. If these shares are not delivered for borrowing within those 2 days, that is a FTD, a failure to deliver. Now, it's not uncommon to have some failures to deliver on any given stock.
This was his whole point. It's not uncommon to have some, but the number that they have, it's way too high. Well, you know what? The trading volume on this motherfucker was insane. In one day, traded 1.25 billion shares. Yeah, there's going to be some FTDs.
10,000 shares, 50,000 shares, 200,000 shares. It happens due to clerical errors or just some inefficiencies in the market. What happens in a stock like AMC when the retail investors own all of the shares? There aren't shares available to borrow.
So there's another assumption, fallacy. You didn't own all the shares in July. You didn't own all the shares in July. Sorry, you didn't. So, next you're going to say that there's synthetic shares and yada, yada, yada. But, no, you didn't own all the shares.
And then you get in a situation where you essentially are creating phantom shares or naked short selling. And that is not allowed. So
it's not allowed, guys. It's not allowed. Ned Flanders says it's not allowed.
Take a look at a couple of stocks before we get into AMC.
Okay. You know what?
All the way up to 3.3 million. Now let's look at AMC. I'm going to do the 3-month chart here, and you can see how high all of these bars are on a continual basis.
Oh my.
And the numbers we're looking at are 3 to 5.5 million shares failed to deliver almost every day.
Didn't the bars go down after that, Tone? The bars went down after that, right? Guess what that means? That means they fucking covered them. Oh my god. Oh my god. Wow, they covered them. Look, the numbers went up and then they went down. Yeah, I mean, yeah, it's about what I thought it would be. So, anyway, even 7 months ago, they didn't get it right. Here's part of that Jon Stewart thing right there. $14.5 billion FTD resets. Wait. 5.9 billion. 14.5 billion FTD resets. What is an FTD reset? It's probably them actually covering the FTD. But because he has no clue, this guy has even less of a clue than any of these other stateside apes. And I'm not I got nothing against anybody from anywhere, but the people who actually directly participate in the market here, these ape influencers and apes themselves, are clueless. So I don't think that, it's just not likely that he would have any clue. Yeah. FTDs, here's Stock Swinger talking about FTDs. Creative Investor 8 months ago is talking about FTDs. Everybody's talking about FTDs. FTDs incoming. So, FTD of AMC is everything. Phil for real 4 months ago. Yeah, this was Short the VIX, which I watched half of this video, left like four. I left a comment and I replied to like 4 comments on it, and 240 million naked shorts. Okay, very specific number. How'd you get there? I wonder if he added the FTD numbers together. Do you think he might have added the FTD numbers together? I didn't get that far. I only got this far, halfway, a little over halfway. I couldn't take it anymore. I couldn't. But it could very well be that he added those FTD numbers together. I'm just saying that could be what he did. I'm not going to take the time to find out. But it would be fun if somebody did. Let me know. Yeah. All this FTD talk. Now we got it again. There's a cyclical nature of AMC phenomenon. How about this one? AMC margin calls. Oh yeah. Credit Suisse 9 days ago. Here's an old ass video of Dave Portnoy posted 3 days ago, but he's talking about GameStop, of course. So that's old. Ah, jeez. Margin calls 3 months ago. Short squeeze channel. AMC stock margin calls incoming 1 month ago. 2 weeks ago, Andrew Mo Money. How close until margin calls? How close? Are we there yet, Mommy? Mommy, are we there yet? Citadel got a huge margin call? Yeah, Shart the VIX. That's what happened. Yep. 8 months ago, margin calls incoming from Zip Trader. I have not listened to one of those space calls on Twitter. I thought about starting a space call on there, like a AMC short seller space call, like, or AMC, AMC ape rehab. That was something that we were gonna do before. Scotty killed Michael Myers. All right. We can do that because I gotta get out of here. It's getting late. It's 11 p.m. and I'm an old dude. So, but yeah, Ape Father scares everybody. Now what I'm gonna do is pause it here so it'll load, so it doesn't stutter. This time. And yeah, if there's anybody here who did not hit the like button yet, you want to make sure you do that now. Before I do this, before I would do what I'm about to do, because, put that trust into me, go ahead and hit the like button first. And then once you are once you are pleasantly surprised and hopefully, in better spirits and laughing and whatnot, then you can know that you trusted Scott. He led you. He shot you straight. He told it the way it was. I gave him the like ahead of time. I prepaid the like, and he followed through. So go ahead and do that if you haven't. Maybe everybody already has, and I just have an imbalance. But anyway, it's enough bullshit. Here we go. This bullshit.
I'm gonna scare everybody in the movie theater. You can't kill Michael Myers! It's impossible! But what you can do is buy AMC stock. Millions coming, baby. AMC stock. You want to be a millionaire? AMC, I'm an ape. They call me the ape father, baby. You can't kill Michael Myers, but you can become a multi-millionaire, baby. AMC in the house. Wow!
Yes, there's the like. There's the like.
I'm gonna scare everybody in the movie theater. You can't kill Michael Myers! It's impossible! But what you can do is buy AMC stock. Millions coming, baby. AMC stock. You want to be a millionaire? AMC, I'm an ape. They call me the ape father, baby. You can't kill Michael Myers, but you can become a multi-millionaire, baby. AMC in the house. Wow!
I love that there's like one girl, it's like, because I've watched this so many times now that I'm starting to like look at things in the background, people in the background.
You want to be a millionaire?
She's holding a drink cup.
I'm an ape. They call me the ape father, baby. You can't kill Michael Myers, but you can become a
This girl right here,
baby.
That girl, she's like, what the fuck?
You can't kill Michael Myers, but you can become a multi-millionaire, baby. AMC in the house. Wow!
Oh man. Oh, that's crazy. Any new videos from Big Man? I don't think so. Okay, well that's it. In closing, remember these FTDs. Not what the apes think it is. Where'd it go? Where'd the FTDs go? Here. But it says all that stuff here. It says all that here. Everybody here knows this, but this is for people that might be watching this later. If it sounds like, wow, that's gonna make this thing explode, there's a good goddamn chance, that it's not going to make it explode, or that it's going to make it literally blow up, or there's some very, very simple concepts that are being overlooked. Because the reality is, what is going to make this thing blow up, like the good kind of blow up, is probably beyond, it's probably not as simple at this point as it may have been in the past, or as people want to continue to paint the picture as. Because everything, not everything, a lot of things are different in terms of the wider economy, people's personal finances, and then the intertanglement of those two things. So, at the very least, I urge people to, question that aspect of it. Does it make sense? Especially when we've had all these catalysts before, tying it together here, tying the room together. We've had all these catalysts over the last few months, which I showed with the search results. We know what happened then. Now we have a almost completely different economic landscape starting to take shape here. Does it make sense that those catalysts that did not work before under more ideal economic circumstances, does it make sense that they would work now under these economic circumstances? Ask yourself that question. You know, that's accessible. I think should be accessible to most people who have the, you know, skills to write a check or make a credit card payment. So like and subscribe, and yeah, everything Lynn said there. Like and subscribe, hit the bell so you never miss a live stream. Good. Very good. Thanks to everybody for checking out my live stream. Ziggy, it's nice to see you. Yeah, it's amazing. They're going to do dynamic pricing. Different movies are going to have different prices. That's cool. I mean, I guess. I don't know. I saw it being spun as revolutionary. You know. What it means is they need to raise. What it means is they need more money. Yeah, because they're still, you know. Yeah, but AMC earnings it was the best earnings in 2 years, which, again, makes total sense as the pandemic is winding down. So, yeah, I would hope to hell that these earnings would be the best in 2 years. Anyway, one last time, the Ape Father, we'll go 1.75, 1 3/4 speed, and with that, also join my Telegram group, finance chat group, and I really need somebody. And Lynn, it could be you, but you've helped me out with this a lot already. So, you know, and I know you're busy now with work, but I really need some help here on this live stream. Not this live stream, on live streams. So consider next time joining the Telegram group, getting out your microphone or headset, and coming on this bitch with me and bullshitting about AMC or whatever. You know, we can talk about whatever you want, really. But I don't mind doing a solo thing, but it's also cool to have one of you guys or more. I mean, hell, we could have a whole circle jerk here if you want, but it's cool to have somebody to, you know, bounce things off of and, you know, have a conversation with and you know, talk about things. So if it's something you might be interested in, please feel free to join that chat, and we can you know, jump in here. All right, have a good night, be safe, catch you later. Here we go. See ya.
I'm gonna scare everybody in the movie theater. You can't kill Michael Myers! It's impossible! But what you can do is buy AMC stock. Millions coming, baby. AMC!
Of course.
You want to be a millionaire? AMC, I'm an ape. They call me the ape father, baby. You can't kill Michael Myers, but you can become a multi-millionaire, baby. AMC in the house. Wow!
Good night, guys. Appreciate you being here. Have a good one.
I'm gonna scare everybody in the movie theater. You can't kill Michael Myers! It's impossible! But what you can do is buy AMC stock. Millions coming, baby. AMC stock. You want to be a millionaire? AMC, I'm an ape. They call me the ape father, baby. You can't kill Michael Myers, but you can become a multi-millionaire, baby. AMC in the house. Wow!